How is everybody doing? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. So report week continues on here. Today, we are going to be covering the Federal Reserve's Economic Well-Being of U.S. households in 2024. So this was a report that was just released here this month in May of 2025. Also, we continue our countdown toward Stonier on Thursday. But I'm sporting my little Stonier shirt here. But let's bring in this report here. So this is the Federal Reserve Economic Well-Being of U.S. households in 2024. If you want to check this report out, there is a link in the description down below if you'd like to go click on it. This is a rather large report. It's 88 pages. It's one of the bigger reports that basically comes out. It is an annual report. So what I want to do is, and this is, I'm going to show you guys the table of contents here. I'm basically going to run through the executive summary of the report just to give everybody the once over. If I went through the whole thing, we'd be here for it'd probably take an hour or two to go through this whole thing. So, but like I said, I'm going to try to keep this just a succinct overall view here. But here's the table of contents. We have the executive summary, which gives us the overall financial well-being, employment and gig work, job quality, care work and living arrangements, income and expenses, savings and investments, banking and credit, housing, higher education and student loans. And then basically it goes through each one of those categories, breaking it down. So you go through with a lot more in-depth information. And there's a lot of really good information in the report itself. But let me read through the executive summary here. So results from the 2024 survey of household economics and decision-making, SHED, kind of funny, which was fielded in October, indicate that people's financial well-being was similar to the previous 2 years, but below the high reached in 2021. Concerns about prices persisted, in other words, higher inflation, and labor market conditions remained solid. Inflation and prices continued to be the top financial concern. A majority of adults also said that changes in the prices they paid over the prior year had made their finances worse, but the share saying so declined from 2023. In response to higher prices, most people reported taking actions such as adjusting their spending over the prior year. The share who took actions in response to inflation was similar to 2023, but down slightly from 2022. The labor market remains solid. Similar shares of people both started and voluntarily left jobs in 2024 compared to 2023. However, these measures were below their peaks in 2022. Additionally, a smaller share of people who changed jobs said that their new job was better in 2024 compared with 2023. So we had basically in 2022, we had into 2023, we had what was called the Great Resignation. If everybody remembers now, we have kind of the Great Sitting Put. But continuing on here, so people also continued to earn money doing gigs, the gig economy, including 13% who sold things and 9% who did short-term tasks such as giving rides or doing odd jobs or doing podcasts on YouTube. I added that last one in there. A meaningful share of those performing these types of gig activities said that without them, they would have trouble making ends meet, though many said they wished the pay was more consistent. Amen. Amen to that. Emergency savings measures were similar to the previous 2 years, while retirement preparedness improved slightly. The share of adults who would pay for an unexpected $400 expense with cash or the equivalent was unchanged from 2022 to 2023, and the share who said they had rainy day funds to cover 3 months of expenses edged up. Additionally, non-retired adults were slightly more likely to say that their retirement savings plan was on track than in 2023, extending the upward trend from 2022. That said, each of these measures was down from 2021. Survey results also highlighted financial risks facing consumers. 21% of adults experienced financial fraud or scams in 2024, while credit card fraud was the most common type of financial fraud. Consumers are not typically required to cover those losses directly. In contrast, the 8% of adults who experienced fraud not related to their credit card lost an estimated $63 billion in total. Other financial risks involving being unprepared for unexpected events, events, including by lacking homeowners insurance. Overall, 7% of homeowners went without homeowners insurance, frequently because they could not afford it. The survey continues to track other financial topics such as care work, retirement, cryptocurrency, buy now, pay later, rental affordability, and student loans. Key findings across each of the sections of the report include the following. So, overall financial well-being. The 73% of adults doing okay or living comfortably financially was similar to the 72% seen in 2023, yet was down from a recent high of 78% in 2021. Inflation and prices continue to be the top financial concern, particularly the prices of food and groceries. People's perceptions of their local economy and the national economy continue to improve, though overall they remain pessimistic. For example, 29% of adults rated the national economy as good or excellent in 2024, up from 22% in 23, yet down from 50% in 2019. Obviously, 2019 was a great year economically. Obviously, right before COVID hit in 2020. 2019 was probably one of the best economic years that the U.S. has had in the last 30 or 40 years. Employment, gig, and work. So people continue to earn money in ways that went beyond traditional employment. 13% of adults made money by selling things in the gig or resale sectors, and 9% made money by doing short-term tasks such as giving rides, delivering takeout, or doing odd jobs. 55% of people who did gig work agreed that it gave them flexibility, but a lower 35% said it gave them work-life balance. Health problems, caring for family, or a lack of work contributed to the timing or retirement for 42% of retirees. Half of retirees with a high school degree or less cited at least some of these reasons. Okay, job quality. 14% of adults started a new job and 9% quit a job in 2024. Both were similar to 23, but down from peaks of 15% and 11% respectively in 2022. Among workers who changed jobs in 2024, 62% said the new job was better than the previous one, down from 67% of job changers who said their new job was better in 23 and 72% in 22. Workers with more education continued to have more autonomy regarding the work they did and where they did it. 60% of those with a bachelor's degree worked from home at least some of the time, compared with 18% of those with a high school degree or less. 17% of employees worked a schedule that varied based on their employer's needs. Care work and living arrangements. So parents were almost twice as likely to use unpaid childcare as they were to pay for childcare. 46% of parents of children under the age of 13 use some form of unpaid childcare from someone other than the child's parents, while 24% used paid childcare. Yes, this just in, daycare is insanely expensive. And yes, I would imagine that people are recruiting other family members, grandparents, so on and so forth, to try to help alleviate some of that cost burden. Childcare costs remain significant. Yes, no duh. Just over half of parents who used paid childcare spent at least 50% as much on childcare as on housing, most people's single largest monthly expense. I can tell you guys, I did daycare for about 8 years. And the cost of daycare was my single largest expense. It was larger than my mortgage payment. It was crazy. Income and expenses. So 60% of adults said that changes in the prices they paid compared with the prior year had made their financial situation worse, but that is down from 65% in 23. In response to higher prices, 79% of adults reported adjusting their behavior in the prior year. And the most common responses were spending changes. The share who took action in response to higher prices was unchanged from 23, but down slightly from 22. The share of adults who reported spending less than their income in the month before the survey rose to 51% from 48% in 23, suggesting that more adults have margin in their budgets. Nevertheless, this share was down from a high of 55% in 2020 and 2021. Savings and investments. So 63% of adults said they would cover a hypothetical $400 emergency expense exclusively using cash or its equivalent, unchanged from 22 and 23, but down from a high of 68% in 21. Progress toward retirement savings goals improved slightly in 24. 35% of non-retirees thought their retirement savings plan was on track, up from 22 and 23, but down from 40% in 21. Now, I just want to say one thing about the percent of adults that could cover a hypothetical $400 emergency expense. So 63% said that basically they could cover that with cash or cash equivalents, which was basically unchanged. What bothers me about that is basically you're telling me that 37% of people out there could not cover a $400 emergency expense. Like that's troubling. That's highly troubling. And that gets in, again, we could have a much deeper conversation about that, but that's not a great thing. Okay, banking and credit. Use of buy now, pay later edged up 1 percentage point to 15%, while the share of buy now, pay later users paying late increased sharply. Nearly 1/4 were late making a payment, compared with 18% in the prior year. That's a big thing. I've been keeping a close eye on buy now, pay later. Keeping a very close eye on that. Obviously, a spike up in delinquency on that, not a good thing. And I think that you would also find that if we looked at the numbers, and we did see, I did a report that was released, I think, from the Cleveland Federal Reserve Bank, all on buy now, pay later, which I think I did just a couple months ago. And if you go back and take a look at that. But again, I think you see that the people that are, the most strapped are the ones that are doing buy now, pay later. So again, is it any wonder that basically the people that are most strapped that are using it are now also starting to see even higher cases of delinquency with the buy now, pay later? So again, we can have a much deeper conversation on that, just something else to keep on. So, and then 21% of adults reported experiencing financial fraud or scams involving their money, with 17% reporting fraud related to their credit card and 8% reporting another type of financial fraud. In total, consumers lost $84 billion from non-credit card fraud before any funds were recovered, and $63 billion after recovering. And let me see here. I think, okay, we're down to the last two here, guys. So housing. So rents continue to rise. The median reported rent was $1,200 in 2024, up about 10% each year since 2022. 10% each year. Wow. About 2 in 10 adults said they were affected financially by a natural disaster in the prior year, including 8% who were moderately or severely affected. Property damage was the most common way people were affected. 7% of homeowners did not have homeowners insurance, most often because of cost. When asked the main reason they didn't have homeowners insurance, 43% said they couldn't afford it, while another 19% it is not worth the cost. Higher education and student loans. As new borrowing for higher education has declined in the past decade, fewer young adults under age 30 have borrowed for their education than those ages 30 to 44. 3 in 10 borrowers with loans outstanding who completed some college, a technical degree, or an associate degree reported being behind on student loan payments, compared with 11% of borrowers with a bachelor's degree. So there you have it, guys. All of the main categories here. Some really interesting thing. I think if you get down into the report here, they have a lot of really good charts, different things to look at in the report, which is great, which is really good if you want to get down here and dig into this and take care of it. But again, I think what we're left with here is basically just to, kind of wrap things up. What we're left with is that overall the labor market remains pretty solid. People are still concerned about inflation and rising prices. People continue to earn money doing the gig economy. Emergency savings hasn't really gotten better, but it hasn't gotten any worse. And obviously financial fraud continues to be a big deal. So it continues to be a big problem out there for a lot of people. But with that, I would say that if you like this episode, please make sure to like, share, and subscribe, as that always helps the channel. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below, as I always love getting back to everybody. And as always, please check out some of the other content on the channel. I hope everyone has a great day out there. Continue watching Report Week, as I got a lot more stuff coming here over the next 5 or 6 days. I'm going to have episodes coming out not only every day this week. I'm going to have 2 on Friday, And I'm going to have bonus episodes on Saturday and Sunday to kind of round out the week with all these reports I've got backed up. But so like I said, stay tuned. More stuff coming. Have a great day out there. Thanks a lot.